Welcome back to Teshkid FX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording has lost the 20-day MA, which is now acting as resistance here on the 4-hour chart. We have also continued to obey the Elliot structures, and before I get further into the technical analysis and also give you my next price targets here on the AGIX chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you the Elliot structure that is being obeyed here on the AGIX chart, where you can see that from these low prices that we had been trading within, we saw a massive bounce to the upside, making a high at around the $0.13 mark in what I'm terming as the high for that first wave to the upside. And after seeing the high for that wave 1, we started a corrective structure giving us the low for that second wave before we started another massive bounce to the upside in the formation of that wave 3, in a move that has now given us a peak at around the $0.67105 mark. And after seeing the high for that wave 3, whatever we expect next is a corrective structure in the formation of that wave 4 before we continue pushing even higher in the formation of that wave 5. And getting a little bit into the details of the formation of this wave 3, because this is what is going to give me the short-term scenarios that I'm expecting to play out within the formation of that wave 3, which is an impulsive wave. We also expected to see a 5-wave structure in formation, which we are seeing over here, having that as the first wave to the upside. Then we saw that wave 2, before we saw that wave 3, then a wave 4, and then a wave 5 to fully maximize the formation of that larger Elliott wave count 3 to the upside. And I can change the color of that Elliott wave structure, where you can see that the wave 5 gave us the peak for that larger Elliott wave count 5 to the count 3 to the upside. And after seeing the formation of a larger Elliott wave count 3, whatever we expect next is a corrective structure in the formation of a larger Elliott wave count 4. And using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, that gives me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5. And I can mark that target area here on the charts like that, which is a target area that we have fully maximized. And having seen the low for that fourth wave to the lower side, which is within this yellow target area that I have here on the charts, there are chances that very soon we are going to start that massive bounce to the upside in the formation of that wave 5. And for that to play out, I'm also expecting to see a break above the 20-day MA here on the AGIX chart. And once we see a break above the 20-day MA and have the support that we need, then that could be the start of another explosive move to the upside to give us a high above the high for that wave 3 at around the $0.67 mark. And once we manage to break above the wave 3 high, then that will be enough confirmation that whatever we are seeing over here is the massive bounce to the upside in the formation of that wave 5, and sketching out a minimum target area to the upside in the formation of that wave 5 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gives me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.76255 mark. And that is the minimum that we can expect AGIX to do in case we continue pushing even higher, obeying the Elliott structures, see a break above the 20-day MA here on the 4-hour chart, and also a break above the wave 3 high, and continue pushing even higher to fully maximize our target areas in the formation of that wave 5. So that is what I'm expecting on the short-term scenarios. But we also need to have a worst case scenario in case we continue seeing a breakdown to the lower side, and in case such a move plays out and we continue holding below the 20-day MA and also give us a low that is below the low that we made at around the $0.36037 mark in what I'm terming as the low for that fourth wave, which is right here, then there are chances that we might continue pushing even lower. And the next support area that I'll be watching here on the AGIX chart using the Fibonacci's, connecting them from the low of the second wave once more to the high of that wave 3, is the fib level 0.618, and that is at around the $0.29033 mark. So in case we lose the fib level 0.5, there are chances of seeing a retracement back to the area on the Fibonacci, that is the fib level 0.618, and that is at around the $0.29033 mark. So we need to also be prepared for the worst case scenario in case the breakdown continues to play out here on the AGIX chart. So that is what I'm expecting here on the short-term scenarios, a bounce to the upside in the formation of that wave 5. But on the worst case scenario, in case we continue holding below the 20-day MA and continue unlocking lower prices, then there are chances of seeing a retracement back to the area on the Fibonacci's, that is the fib level 0.618, and that is at around the $0.29 mark. So let's be patient and see how that plays out, and I'll be keeping you updated. And also taking a look at the indicators here on the RSI, we are trading at around the 41 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 5. The RSI also supports the worst case scenario. And also taking a look at the MACD, here on the MACD we have been able to print a bearish cross, fully supporting lower prices and maybe giving us one more new low in the formation of that wave 4. So let's be patient and see how that plays out, and I'll be keeping you updated.